I'm sorry, but no government is going to help you through this crisis that we have when it comes to a supply crunch in Australian housing. Politicians will say whatever they like, but the numbers do not lie. And I'm going to share with you exactly what it all means, and I'm going to bring it together with a conclusion. And I hope you guys watch all the way through to the end because this is very, very time sensitive. So if you're interested in what my thoughts are, definitely keep watching. Hey guys, my name's Ravi and welcome back to Personal Finance with Ravi Sharma. If you're new here, smash that subscribe button because I talk about real estate, personal development, and all things financial freedom. Now I do have a book which you can go ahead and read if you don't prefer watching videos or you hate my voice, then you can go and check out one of the best-selling books in 2025. It's called Retire Filthy Rich with Real Estate. It goes beyond just real estate. I talk about strategy and I talk about the mindset and how everything needs to be in line when it comes to relationships, happiness, and money. So definitely go and check it out. I'll leave links in the description box below. Now, the housing sector is very, very important to the entire economy here in Australia. But what's really crazy is that productivity in the housing sector has dropped by 12% over the last 30 years, while the rest of the economy has increased in productivity by almost 49% during that time. But that number is not as scary as what I'm about to tell you now. Right now in Australia, there is 37% less properties to rent than 10 years ago. And that number's scary on its own. But let's compound that problem even further. Right now we have 25% less properties available for sale than 10 years ago. Okay, so now the problem's really bad, not just from a transaction point of view, so buying and selling, but also from a rental perspective. That's pretty hard to hear. But what's crazy is over the last 10 years, the Australian population has increased by 3 million people. That is an increase of 12.6% over the same period. So what you're saying to me is the supply of properties has decreased, but we've had population growth, and 54% of that population growth has come from net overseas migration. And we know immigration is a problem, especially after the lockdowns. We've had so many migrants come into the country. And I think it's very important that we have migrants, but I think it needs to be sustainable. But we also need a government that's going to support infrastructure and proper housing. Otherwise, you have an economy that's going to completely fail because the country itself is not built on strong foundations. Now, let's go through some numbers and I'm going to bring it all home together because I have some interesting thoughts around what this means, especially if you're scared about where this property market's headed. Now, I've showed this dashboard before. It's the UDIA Housing Index. It provides a quarterly health check on the state of the new build Australian housing market. Drawing from a range of data sources, the UHI provides timely indicators of changes in demand, supply, and costs for new residential properties across the nation. And what we can see here is a score of 90, and this number is made up of a couple of other indicators. Now let's go down here to demand. What we can see here in demand is a number of 108. What we have as the national long run average is 101. So we're still above average levels when it comes to demand in the market, despite the fact that we've seen interest rates increase over time. Now things have cooled down over the last 12 months, but we're still much higher than where the average is, although it's coming down closer to that average. But what's crazy is when you compare that 108 number to what supply looks like. And here we have supply at 94. And although year on year it's increased by 4.2%, so we're heading in the right direction, the long-term average here is 100.1. So we're still well below that average there. Now what's crazy is that that's despite coming off the lows of 88 all the way up to 96, and now things have started to taper off again. But what this tells me is that we've seen rental listings fall, we've seen resi construction work increase, but it's not enough for us to go and alleviate the problem around housing supply. Now, the Australian Bureau of Statistics released quarterly data on dwelling commencements and completions, which badly missed the Albanese government's housing target. Only 41,900 dwellings commenced construction in Q4 of 2024. 18,100 fewer than the Labor's target, which is a miss by 30%. It's quite wild, which requires 60,000 homes to be built every single quarter. And I don't think we've hit it in any quarter since then. And what you can see is that yes, we had this spike up, and that was largely due to the schemes that were in place. I think it was called the Home Builder Scheme. And since then, we've just seen nothing but down. We have started seeing a little bit of a push up, but nothing notable, especially when you account for how much demand is in the market. Now, only 168,050 dwellings commenced construction during the year to Q4 2024, which again is 30% lower than the annual run rate of 240,000 required to meet Labor's housing target. I'm sorry, but these are really bad numbers, and this is why we have such an issue, because if you're missing the target by 30%, it doesn't matter what you set as the next goal. And I've dived into what the policies look like when it comes to housing. Definitely go check out this video after this one. Now, here's a really interesting chart. Dwelling construction versus population change. What we have is in the blue, approvals, the orange is completions, red is commencements, and green is population change. What you want are these numbers to be really correlated, so the lines should all move in the same direction. And what you can see is the population growth up until sort of 2006, pretty stable. What you see for approvals, dwelling completions, and commencements will sort of float up and down, but if you saw an average, it would be very similar to that line in the green. Then what we saw is around the time the GFC came around, we've seen population pop up. And at that point, we saw demand come into the market, start swallowing up some of that supply. And that happened in the early 2010s. Then what we saw is dwelling completions absolutely take off. We had so many more properties being built around the time of 2015, 2016. It's around the same time that we started seeing lending restrictions come in. And so what we saw was a lot more properties coming into the market and a very soft property market during that time. So a lot of markets did go down in value. But then we have the lockdowns. And what you can see is population change absolutely fall to the floor, yet we still had high levels of supply. But since then, we've had this massive rebound. And that was really to counter whatever the effects of the lockdown were going to be in our own economy. What we've seen here post 2020 are some of the highest numbers of immigration that we've ever seen. Now, during that time, we've had interest rates go up. And as interest rates went up, we didn't have as much of an appetite to go and commence new builds and get approvals in the system. So what you see is all of the supply that's in the system gets swallowed up, and then you've got a government that's encouraging immigration to come in, but there's no supply. And what we've seen over that time are massive insolvencies within the construction industry. So the companies themselves that need to go out there and build these homes are unsustainable and insolvent, so they go and shut down businesses. So they now can't produce more homes. But not only that, the ones that actually do want to produce homes, you now have to deal with local governments to go and get that approved, which could take 6, 12, 18 months. And then when you finally get to that point, the person at the end, which could be you and I, can't actually borrow because interest rates went up by 13 or 14 times. You have all these filters, which means you could start with 100, properties that could have been built to eventually only have like 15 that are actually going to get built. And when you've got incoming demand at 120, even if you approved and got everything done at 100, you still would have a supply issue. What doesn't help here is the new dwelling costs, and it continues to increase. In the blue, you see apartments, detached homes in the red, and then you have the gray townhouses. And all you see is the numbers go up and to the right. Now, when you go deep dive into apartments specifically, it doesn't matter whether it's high rise, walk up, or mid rise, they're all up in value. And this is the construction cost. So what's happening is in order to go and get the materials, they've increased in price, but in order for these companies, these construction companies to stay in business, they need to make a margin. And that margin is not as high as you think it is. But they go out there and say, okay, well, we need to add the margin, and then say, well, now it's going to cost X amount. So if construction costs increase by 30%, why do we think properties wouldn't have gone up in the same amount? Well, in fact, what we saw was property prices go up on average by 40 or 50% during that time. And that makes sense. And although you and I can sit here and argue in the comments section, the reality is that this isn't just because people go out there and just want to buy investment properties and hoard all that cash. It's because systematically we have an issue. And this is what I mean by giving context. Some people just want to hear the headlines and say, I want to just blame someone. The reality is there's so many cracks in this system that when you actually look at it, the reason why Australians are so infatuated with buying real estate, it's because the cost of building something increases over time, so the replacement value is increased. So if I build a house for 200K 30 years ago, I can't build half of that home for 200K today. That's why we as Australians go out there and say, well, hold up. The currency that I have saved all my money in gets taxed and then gets devalued with inflation. I need an inflation hedge. And that's where you say, okay, I'm going to look at something like real estate because that's going to outpace inflation over time. And all I'm trying to do is say, hey, I work really hard for my money. I want to protect my money, and I'm going to put it into something like real estate. Because the government sure as hell wants more people to come into the country, and they're not building enough homes. It's one of the surest bets I've ever seen in my life. And that's why 11 years ago, I started investing in real estate. Because I understood at 21 that there's a flawed system here. And what's going to play out is, yes, times where there's going to be an oversupply and then an undersupply. And when we see those periods of undersupply, we're going to see markets go up. What I didn't fully understand is how the government works with fake money. And if they continue printing money, which again, I think is about to happen, and the cost of borrowing that money decreases, well, what you're going to see is the biggest boom cycle, and people often refer to as a super cycle. Now, I'm going to make a video on this channel around where I think property prices are headed, why it's so important, irrespective if you like the system or not. At this point, if you don't like the game, you don't have to play the game. But unfortunately, everyone else is. And that's the situation we've been put into. The government is also incentivized for you to generate enough wealth before you retire because they don't want to have another liability on their balance sheet when it comes to pensions and social security. So if you're in a position right now and you're thinking, I want to invest or I want to go and buy a home, the best time to buy real estate was yesterday. The second best time is today. Now you might understand all this, but say, how do I execute? How do I pick up the phone and talk to an agent? Which areas do I look at? What price point do I go at? How much can I actually borrow? Who do I contact? Is it my bank? Is it a broker? A lot of these questions can be alleviated by simply booking in a call. There's going to be a link in the description box below. If you want the help, then go ahead, book in a free call, and we can start strategizing around how you actually execute this and how you prepare yourself over the next 5 years. Because I think if you position yourself well, you'll make a lot of gains, but you'll also protect your wealth and you'll protect the hard-earned money you're making from your job right now. Now, hopefully you're not watching this at your job, but if you are, I'm not going to judge. If you need the help, reach out. If you've enjoyed this video, subscribe and watch the other videos I have on this channel. I'll catch you guys in the next one. Thanks, guys.